Okay, this is the daily money-making setups that occurred on the S&P E-mini futures for June 19th here. And we're using the 1500 tick bar chart as well as the processtrading.com right edge trading system. Now, what we'll see is that during the overnight, the S&P tumbled down to like 2736. And then from about 10:30 on, it started to rally and trend upwards. And that's what we're seeing here at 11:02. We have the process trading VWAP here, which is yellow, which says that it is in an uptrend. Now remember, when you're reading this VWAP, the yellow says that it's normal trend up. The green says it's extended. And the blue says it's overextended. So that we know that we're in an uptrend here. Then at around 11:05, somewhere around in this area here, where the circle is, we see the particular price cycle bars. That's these white bars right here. Previously, I'd color coded in blue, but the white shows up better. So we see the price cycle bars here, and right here, even though price had been trending up, we can tell this is buying at the bottom. This is not selling. This is selling here, but this is buying at the bottom right here. And when we look to see, well, what bottom is it? Well, we look down here to the sentiment oscillator and the momentum part of the indicator, which is this solid line, tricolored line here, that is at the bottom of the oscillator. So we know that this is buying at the bottom. Now, it could represent selling had we not had this indication, plus right here we see a price cycle bar that goes above this dashed line here, which is the stop exit line, which tells us the impetus is then to the upside. So this is the confirmation that this is buying at the bottom. Also, when we look at the cycles, we see that price is in an upcycle, and that upcycle on the intergy, which is the internal energy, goes clear over to here. Now, when you have a cycle, it has to be above the with positive energy, and then it goes below the no demand, no supply line, which is in the middle here, and then it crosses back up. So from where this line started back at around 10:30, clear up to here, which is 12 o'clock, and then it has a short cycle part of it right here. And then right here, this starts a new cycle. So this is the cycle as shown by the energy that volume is expressing. So when we look at the sentiment oscillator, we see that that cycle starts right here. Well, it started here, and then it's showing that there, on the energy, it's showing that there's weakness, and we see that the momentum is cutting across the sentiment line and heading down, so they're both starting to slope down. So we know that the cycle, the up part of the cycle, is ending right here. On the energy, it doesn't, the supply side doesn't start till right here. And on the short-term trend oscillator, it doesn't start till right here. So you can see all three of these non-correlated indicators are telling you when the that part of the cycle is phasing out, and it goes over to here where the next cycle begins. And it shows you there on the both the sentiment oscillator and the short-term trend oscillator where they're beginning. So that when they're non-correlated, giving you different data but telling you the same thing, then you have more reason to have assurance that the reading is correct. So back over to here, now we know as well, when we look at this, we know that this is buying at the bottom. There's no supply in this part of the cycle right here. You don't see any supply until supply comes in over here. That'd be the red bars. So we take this is buying at the bottom from right here. You enter into the trade, and then these price cycle bars here actually portend selling at the top. So these are selling, and you can see that right down here on the cinnamon oscillator that the momentum line is over the top boundary here. And also you can see that the demand bars they came to an apex and now they're starting to come down. So this is selling at the top. Now, even though it is selling at the top, there's still no supply. So all the residual demand has to come out of the cycle. So that is what's happening here. And it goes up, as naturally it would, to the contraband line, or where you can take a contrarian trade. Now this line is a contraband line, and it also serves as a line that would be where price regresses to the mean from. So price is going to hit this line, and then it's going to regress to the mean, which the VWAP indicator also serves as support and resistance, plus it serves as a regression to the mean line. So we have price regressing to the mean line here. Well, we knew this was selling at the top. We know that this is the culmination of that energy that is in that demand cycle, and it goes up to the top, it hits this contraband line, and then we get a price cycle bar right here with the classical configuration of price bars. There's a doji right beside it, plus you have a timing alert dot. So we know at this point it's at the type of the cycle and it's going to regress to the mean. And just like over here, when this bar right here went above the stop exit line and helped confirm that this was buying at the bottom, this bar, this price cycle bar right here, goes below, and you can see that the stop exit line had turned from green to red right here. It went below it. So that is another confirmation that this is selling at the top, and actually this was the end of that portion of the cycle, and the timing alert dot alerted us to that specific time. So at this point we get in immediately, and we take price, we follow price down. You can see the price cycle bars showing intensely that price is coming down. And we see that here with the supply side of the cycle down here forming, and then over here coming to completion. But at this point here, we didn't exit because supply is still there. Now, when it gets to right here, on the energy that's taking place, there's actually no demand and there's no supply right here. There's a little bump up right here and everything, but this is essentially no demand and no supply. We see that demand starts to come back in over here right when the momentum shows us it crossing the sentiment line or the conviction line over here. So at this point here, having taken the trade now from this low, because we knew that that was buying at the bottom, to this high, and taking it short now, since we know this is selling at the top, And that price from the contrarian band will regress towards the mean. Here it is down towards the mean here. We see the end of that cycle. So this right here is one cycle, and now this is starting another cycle over here. So we take it down here, we get a price timing alert dot. So the same thing that happened over here generally is happening over here. This, within this circle, this actually represents selling at the top, and that is the selling. It's the residual selling from this down move. This represents the selling at the top. It is that from that down move. But right here, these two price cycle bars represent buying at the bottom. And again, just like over here, we knew that was the bottom when it was down here. Well, we know that it's at the bottom down here, and we also know that it's the end of the cycle. So that when this price bar right here crosses above the stop exit line and it turns green, we knew that this was buying at the bottom and that this was the time to get in to go long. So this actually, this is the trend. The VWAP tells us the trend is up. And so we can take a trend trade following the trend management rules, or you could take a discretionary trade here. So at this point, we had taken this from the bottom up to the top. We've taken this down here, and we know to go long now. So we're just going to take a trend trade that will get us into our position right in this area following the process trading trend management rules for a trend trade. And when we get into that position, now we're following the cycle, the up cycle of it. So we see demand coming in. We're going along with the up cycle. This bar right here represents buying. It's actually buying, because we can see that the energy is still heading upwards. You know, that's the way that a trading cycle works, is that you sell high, buy low, and then you'll sell high again here. Well, this wasn't at the high, but this is at the high right here. So this represented buying, whereas this represents selling at the top. We can see that it is clear up to the contraband again, and it has a timing alert dot, plus prices overextended. From this point on, though, even though it's extended, there's still some energy. You don't see any supply down here until over here. So the cycle doesn't end till over here. So there is demand falling off, but there's no supply yet. That's what's causing this to go sideways right here. And then at this price cycle bar right here, this again is selling at the top. So this is selling at the top. This is selling at the top. And you can see that it has a small amount of residual energy from the up portion of the cycle, but you can also see the divergence that's going on between the energy and the cycle moving up. So when it gets to this point here, we know that since it's past the contrarian band and we have a timing alert dot, we know that price is likely to regress to the mean again. And here's, you see that happening right here. So those were the great setups to see today, and that's how to read it with the price cycle bars and how you can tell. I want to mention that whether it's over here and this is actually buying at the bottom and this is buying at the bottom, what they'll say in classical technical analysis is that, oh no, this is climax selling. No, that is not what that is. This is buying at the bottom. And we know that by the configuration, we know it by the cycles, we know it by the energy that's in it, and we know it by the structure of the price bars along the stop exit line. So this is buying at the bottom, and actually this was buying at the bottom too, where this did represent the residual selling. And again, in classical terms here, what you have here is these price cycle bars here that represent selling. That's just forcing it down here closer to the VWAP line, and it's running all the stops that are just placed right in here. And it's picking up all those stops. And this is the buying. It's not just buying a stop, but it would occur anyway because this is the structure of climax buying from this regression to the mean. So I hope that helps. And these setups for making money on the S&P Emini futures are out on processtrading.com daily. You can go over there and see all the different blogs, the E-mini Money Minute blog and the Stock Mini Money Minute blog to see about the stocks as well. And if you have questions or comments, there is a contact form at the bottom. You leave your email and leave a comment or question. We'll get back to you. If you like to get these, you can subscribe, and these should come to you daily. So, and I hope your trading went well today and goes well tomorrow. Until the next video, again, I hope all your trading is profitable.